Okay, well, welcome. Good afternoon. My name is Simon Campbell from Ike's Investor Show. I also run the Round the Clock Trader online events, and I've known Alpesh for 20 plus years, and delighted to still count him one of my friends. So really good to have you here, and I'm really delighted to have Alpesh for the next 10 or 12 minutes. It's a busy day, but
and I'm over here, I should say.
Yeah, hello, thanks.
I am here.
I'm really doing this on behalf of, I have a fairly large community of investors and traders, mostly UK, where we offer education and webinars, all that sort of thing. And I'm getting a lot of questions and a lot of activity and communications at the moment. So I thought I'd ask Alpesh if he could come and help me out to explain and try to settle some of the nerves, be a sort of a cool head, a hand on the tiller in terms of where we're going, because it is an extraordinary year. We've got all sorts of things competing. We've got obviously the war in Ukraine, the cost of living crisis. We're still suffering the effects of Brexit, some would argue, and all sorts of things just seem to be colliding in this sort of perfect storm for the markets. And we're seeing some big companies collapsing, some other companies that are starting to go up, some sectors that are doing well that weren't. It's all very confusing. Quite a lot for us as the retail investor to keep up with. So Alpesh, this is where I thought maybe you could just give us a slight overview of, say, what's happened this year and where are we now, first of all.
Yeah, thanks, Simon. And you're absolutely right. And you look at the data for the first 6 months of the year, and people are going to see a lot of headlines today, which we'll talk about. It's the worst start to the US markets in some 50 years. It's the worst 6 months. Now, there's a flip side to all of that, which is, well, good and bad news. The bad news is, our pensions and our longer term savings, we've got to have them. They're there. So to some extent, we're tied to the markets. That's sort of the bad news in a way, because there isn't going to be a tooth fairy who's going to just give us lots of money in the future. Equally, the good news is, okay, those bad falls are behind us. The data and the statistics, if you look at history, and history is not a guarantee of the future, but it can have some indicators suggesting what's going to happen in the future. That suggests that there'll be some buying opportunities, as you've hinted at. Now, the good news for us, you and I, is we're not long-only retail fund managers, and we're not stockbrokers. So we're not in the business where we've got a conflict of interest with our audience, where we have to say, oh yeah, no, it's going to be a really good time to buy. You should buy this, buy that, buy this, because that conflict of interest leads to bad advice, bad information, and people actually doing badly, doing rather poorly. The advantage you and I have is, look, if we genuinely think the market's going to continue falling, we'll talk about the trading side, which I think is a really good, important side, because you can be in and out of the market in the short term. You can short the market, and there's been people profiting from that as well. And if we think that the market has hit some kind of a bottom in certain companies, then we can equally say, look, I think give it another week. Let's see what happens with this company and that company, and this could be a good price to get in, because as we know, and we've known each other, over 20 years now, I think it's coming up to about 25 years. Yeah. That the market overshoots to the downside, and you get some bargains as well. And I really want to reiterate that point.
To be companies that are the price is down, but the valuation may be the same. So that's an undervalued company.
Yeah, exactly. And it's a tricky thing to navigate for people, especially when they want to be careful because it's their pension or their SIP, ISA, and so on. And so part of our job is to educate them and say, look, just because the price has fallen doesn't mean it's necessarily undervalued, could still be overvalued. In high inflationary periods, the price earnings multiple drops, and people go, what? Why? What? Wait a minute, we've got 9% inflation, and the stock price has dropped 30%. I thought it was cheap. And we got to explain to them, you can have two companies, both have dropped 30%. One's an utter bargain, the other one isn't. One might deliver you 100% return in 2 years. The other one is just going to keep gliding downwards. And our job is to, first and foremost, educate them in the simplest possible terms in the shortest space of time, so that when they make those decisions, and we might look over their shoulders and say, yeah, that decision makes sense, that they've got that helpful voice, as opposed to, say, a broker or a long-only retail manager whose job is always to say, oh, keep buying, keep buying. I mean, one thing which has been infuriating me in the last 6 months has been bloody Cathy Wood on CNBC every single second talking up her book saying, nah, text the way to go, text the way to go, text the way to go. And you know what? I've seen it with fund managers in the past. Just before they blow up and completely implode, they have to keep being in denial because they've got a conflict of interest.
So, I mean, I've heard this a long time as well. A lot of successful investors and traders that I work with and worked with in the past, they turn down CNBC. They try and tune out some of the noise. But there's tens of thousands of people that came into the markets during lockdown, during 2020, and it was fairly easy for a lot of people. They just went on to Reddit or looked at some of these what we call meme stocks, and put in on, you know, we woke up the next morning and they were twice as rich. Is that the same now, or is it now a question of say, well, that's the lesson, is that you need to be doing more of your own research and more of your own, because they didn't really know what they were doing. A lot of people, most would confess to saying, yeah, we didn't really know. We were sort of taking a tip from the boards on the internet.
Yeah, and everything was going up anyway, so you were safer. We live in a world at the moment where everything isn't going up. That's self-evident. Yeah. And therefore, you can't hide your ignorance the way you could before, which is just pick anything, throw a dart at the board, or an article from a magazine, and the stock went up and you thought, wow, I'm a genius. The magazine's a genius. Everybody's a genius. That world has gone. Now, the people who are going to do well, and one of the reasons you and I have been around for 25 odd years in this, is the people who are going to have the toolkit to say, okay, I can separate quality, of which there are fewer companies now because the tide's gone out, from just noise. And I've got my toolkit to say, okay, I might do a bit of trading. Trading is more difficult, potential higher rewards, but more difficult, more likely to lose money. And you might say, I don't want to trade at all. And I'm going to sit that alongside my investing. So that's another toolkit I've got with me. And with my investing, I'm going to hold that for 12 months. And if the market, you know, I'm going to be very picky with the stocks, very selective, because it's a difficult market. It's like driving a car. Suddenly it's snowing, raining, and it's foggy. You're going to have to call on more of your skills than you did when it was sunshine and, you know, you could drive with your eyes closed pretty much and the roads were empty. Okay, that's gone. But you're going to use the same skills. You're just going to have to be a bit more focused. And equally, on the trading side, you might, if you're into the trading part, and I always say to people, if you've got the time, energy, and inclination and the risk appetite, then do look at that alongside your investing, because it's always improved my investing to have my trading. And the reason is, I know with investing, the markets might go sideways for a couple of months or for longer, and I might have to hold cash as I've had to for most of this year. But at least I know with trading, well, it's okay because I'm doing the trading part. So psychologically, I'm not trying to trade my investments or turn my trades into investments, two huge mistakes. And I've got to mention, you know, one of the reasons we're talking, we've got our summer school in Spain, and this is the kind of stuff that we're going to do. And it's the first one we've done in 20 years because, well, basically people said, you know what, I don't want things sporadically, here, a bit here, a bit there, a magazine article here and a video here and a YouTube there. And so we've gone the exact opposite way, which is to say, look, now's a good time to learn. Summer's always a good time to learn because you've got a bit more time, your mindset's a bit more relaxed. And we're going to do that over those 2 days to teach them both the trading side, the investing side. And the idea is after those 2 days, you're pretty much equipped. We'll keep in touch with them after that, keep doing follow-ups as part of that. But, you know, the continuing professional development, as it were. But the whole point of it is, well, look, now's the time to use that. Now's the time to use the education so that you can learn to earn as the market improves.
And it's interesting to hear you talking about investing and trading at the same time, because traditionally people have been sort of trained to think about, oh, are you an investor or are you a trader? The trader is this chat with gadgets on, sitting at a screen all day, watching every tick of the market and so forth. That's not what we're talking about, because the clever way forward, and this is what I'm seeing more and more with lots of people. They need to combine both, and they need to know that they've got they're into longer term trends, good solid stocks. The shorter term trading can actually provide an income. It doesn't need to be that you're sitting there at the screen all day, though. I think this is what puts some people off. There's ways and strategies that can help you manage.
And you know me, Simon, it's all about return on time. You know, if I thought sitting in front of a computer screen and smacking my keyboard every second would generate more money than actually being very selective and spending less time, so I don't do trades out of boredom, then I know what the right answer is. And it's that experience and expertise I want to get across to people. But also it's some of the know-how from the trading side of when you can see downward momentum, which saves you, and you could in the investing side, and tells you on the investment side, you know what, I see a lot of downward negative momentum. That seems to be overpowering anything to do with valuations or growth and everything else. So let's just sit this one out. And this is what happened to me in January. I thought I'd be investing just like every other year. It's going to be another good year. Of course, I thought that. Most people thought that. Then January the 1st happens and the market's got some downward momentum. So I think to myself, well, before I deploy capital, I'll wait another week for my investments. The week goes by, still looks negative. Wait another week. Thinking, well, you know what? I'll just wait till February now because it's still. Then February was negative and the momentum continued negative in March. I didn't know it was going to keep going negative, but the great news was it just meant I used that trading know-how in my investments to say, well, I can't invest this capital because the momentum is still downside for the investment side. It was great for trading. Sorry?
You can't swim against the tide.
Yeah, and you just realize that actually those skill sets meant I saved myself, what, on a long-only portfolio, 25% to the downside, but it also meant that you had this massive, great one-way bet on the trading because everything was falling. So the trading at the start of this year had become what the investment bull market has been for the last few years. It was a one-way bet. And there's a video of me on YouTube where I'm talking about this and to the BBC saying, yeah, occasionally you get one-way bets. Not very often, obviously. The market's not stupid. It's not going to give you, but you know, that on the trading side allowed you to make some money from the falling markets, even though your cash on the investing side was on the sidelines. And I think if you've got the inclination to learn a bit of both, and that's what we're teaching in Spain on the 2-day program, then you're going to do better than if you say, no, this is just investing, this is just trading, I don't want to learn anything else. I think the more education and information you have, the better it makes you, not just in investing and trading, but actually in everything in life. It just makes you able to take those skills across. And that's part of what I'm going to teach people, the trading part. Even if they're not going to use the trading part, at least they have the know-how to apply to their investing and say, hey, that's negative momentum, I'm just staying clear. And you know me, Simon, I absolutely loved my Costco stock and my Amazon and my Apple and my Microsoft. I had to get out of all of them because the momentum was so negative, which I took from my trading side, that on the investing, I held cash. And thankfully, you know, as I watched, I don't know, Amazon dropped 30%, I thought, phew, thank God I did get out of it. Even though you know, if you told me in January, oh, Alpesh, did you foresee that? No, I didn't foresee it. What happened was you just saw 1 week of negative momentum and it triggered a stop loss because it dropped 10% from its peak. And you thought, right, I'm getting out of half the position. Then it dropped 15, not right, I'm getting out of all of it. And I'll wait till it comes back. And it's still not quite hit the bottom, I don't think. And we'll teach people how to.
I mean, what about Amazon, though? I mean, let's take Amazon. The momentum's there. There's fear in the markets. There's the possibility of war. But I mean, let's take away, for example, let's suggest it was a peace deal brokered in the next week. Probably won't happen. But theoretically, would you still see these tech stocks returning to the previous valuations, previous prices, rather, I should say?
So for me, Simon, and what I'm going to be teaching people is we're not going to gamble on Putin's mindset. If you do that, you're crazy, obviously. And we're also going to take every company on its own merits. We're not going to say it's a tech stock, therefore X, Y, or Z. It's got to be, with companies, just like with people, it's got to be meritocratic. We can't make broad brush assumptions across the board because there are always good exceptions to everything, right? Yeah. So if we take whether it's an Amazon or a PayPal or whatever, or a Costco, it's going to be, and whether it's retail, as in the case of Costco, or whether it's pure tech like say an Amazon or although Amazon's retail as well, although cloud services are tech, most companies nowadays, they span so many different sectors. What we're going to do is we're going to say, right, have we really quite hit the bottom on this one? And more importantly, what are the odds? I only need 20 stocks in my investment portfolio. And is this in the top 20 out of 10,000 companies based on all those metrics? So we're going to really be belt and braces, because my way of choosing things is, this has got to go in my son's ISA, right? And I've got to be answerable to my wife. So that puts the fear of God into you on both occasions. And again, it's about me. Well, there you go. And you got to say to yourself, well, I don't want to be getting it wrong. So there's no conflict of interest with my audience. They get the God's honest truth of what I think, has got to be my best efforts at getting it right.
Yeah.
And so whether, like I said, it's a PayPal, it's going to be right. Well, what's the potential? What's the likely return? And we've got to be able to do this with the people who I teach. They've got to learn it over those 2 days and be able to thereafter be able to do it like this, because it's all about return on time. Okay. And the older I get, the more I'm mindful of that. So what I want after those 2 days is, and we're going to do some exercises with them and show them how to evaluate these companies relatively quickly and speed it up, so that they can see in 5 to 10 minutes, right, yeah, I want that one, I don't want that one. So they can narrow down 10,000 into about 100, and that narrow 100 down to 20, and evaluate that relatively quickly. And then, go play with their kids and smell the roses and all the rest of it. So that's the bigger picture.
What about technicals? Sorry to interrupt. What about technicals? The people that are already doing some trading and maybe like looking at the charts and trading off the price action. Will that come into the course?
Absolutely. So there's going to be, think of it like 2 circles, concentric circles. You're going to be some which is just pure trading related. It's just pure momentum. Okay. It's like currencies, cryptos. It's going to be stocks. What do we want to buy? Commodities. What do we want to buy, sell? Why? Then there's going to be an overlap with investing, which is, well, how can we use some of those skills to make our investment decisions? And then there's going to be some pure investing stuff, which will be just fundamentals. It's going to be, well, what is valuation and which stocks do I like at the moment? What is profitability and what should we look at? What is cash flow and which are the important things to look at there? And then how do we put it all together so that at the click of a button very quickly, we can say, yeah, that's a good company, that isn't. There's, like I said, look, when there was a day in June where every single S&P 500 stock fell. So no matter how much knowledge you had, whether you're Warren Buffett or George Soros or God himself, you could not that day get a company which was going up. You can't, manufacture things which aren't there. So what we're all about is, how do you make sure you've done your due diligence so that the chances of doing well are increased? And we know how to increase the chance of doing well, because we know from the data, and I'll teach people this and show them all the background stuff, that companies which have good profits compared to their share price and good revenue growth, et cetera, have good discount cash flow prices, they tend to perform better in their share prices and therefore for our pensions than ones that don't. So we'll show the academic research. There's 3 Nobel Prize winners research I'm going to be sharing with people as well. So it's going to be informative, educational, but the idea is it's to leave you with actionable skills that you're going to practice in those 2 days to get ahead. And that's it. From that point on, you can then take it forward to forever do better and better in your investments. That's the whole goal, and in your trading.
But you don't need experience to come on this course. This is something that we talked about before. It's applicable to beginners, people that already have their trading, people that maybe been doing it for many years. We want it to be open to everybody. You're not looking for any basic level of financial competence or anything like that, are we?
No, that's exactly correct. It's funny because you see all my books over my shoulder, which have been translated into 8 different languages. So the publishers would always ask me, is this for beginners, intermediate, or advanced? And I'd always say with all my books, it was the same thing as well. I'd say, actually, I want it for people of all levels, because we're not teaching them the sort of conventional way. What's happening is, if you're an absolute beginner, you'll be brought up to speed. and then told the important parts. And if you're advanced and a PhD, you still won't have got this stuff before, because I teach PhDs in finance and it's still new to them, because what they're taught on their degree courses are sort of very traditional conservative ways, which, you know, it's fine if you're going to work in academia, but actually in the real practical world, it's the practical stuff that's important. So
Brilliant.
you know, we're going to have, and by the way, most of the people who've been in touch with us are, I would say, they are beginners. You know, they're accountants, they're lawyers, they're dentists, they're not finance people by any means. So, you know, in that sense, and they're not Nobel Prize winners in economics. So let's just assume, you know, we're starting everybody, they're mums and dads, they're regular people, Simon. That's the point of it.
I'm gonna tell people a little bit about the course, because I'm actually helping you to put it together. I'm going to be there as well, and Dave, we're going to be there together. And I'm going to tell people a little bit about that, so I'm conscious of the time, but I'd like to just give you a minute. I'm going to put you on the spot and say, though, five stocks for now, maybe till the end of the year. What are you looking at? What five stocks would you have your eye on at the moment?
Right. So
while you have a think about that,
go on.
Can I give it? I'll give you a minute to think.
Yeah, that's fine.
And then I'll just tell people the course we're talking about is a 2-day. It's called the Alpeshpatel Great Investments and Trading Summer School. It's something that we've done before, Alpesh and I, but we haven't done it for about 20 years. We're doing it again this year for the first time. It's taking.
We got busy and we had kids in between.
Life gets in the dogs even. That's another story. It's 2 days. We're in the south of Spain. We're at the most luxurious hotel in the south of Spain called the Villa Paderna Palace Resort. You don't have to stay there. You can stay at other hotels close by. The fees cover your course tuition, 2 days. We have coffees and lunch all together. It's a very small group. We're already about half full. We're probably having no more than 12 to 15 people on the course, and that's deliberate, because this is an intimate sit down with Alpesh over 2 days. It's time to get to know you, and for Alpesh to be able to give you all the benefit of his decades of investing and trading experience. So it's not like any other seminar that you might have been on, where you've been one of 50 heads in a room looking at a PowerPoint presentation. We're going to do practical sessions as well. We're going to look at the live markets. I think you'll find there'll be a huge amount that you can do for that. I'm here to speak to you if you're interested in attending. We'd love to have you. It takes place on the Wednesday and Thursday, 27th and 28th of July 2022. So this month, 2-day course. And my telephone number is 020-7193-4540. But the best place to go for information is onto the website page. So simply go to alpeshpatel.com/Spain. That's alpeshpatel.com/Spain. And so hopefully you can join us, or just give me a call to chat. I can tell you more about it, and we can make plans, and I can help with all the arrangements if you wish. So Alpesh, just as we finish, I put you on the spot.
You did.
Which five stocks?
And I tell you how I'm going to answer it on the spot, because you didn't tell me beforehand you were going to do that.
Sorry.
So I'll tell you how I'm going to answer it. There's going to be more than 5 companies I'm going to give to people who are on the program, and they're going to be companies that's going to surprise people. They're not necessarily all going to be tech companies, and they're not going to be companies they've heard of, but I've got some multi-billion-dollar companies with low volatility, which have gone up every single month so far this year.
Wow.
Okay, so think about that. Yeah. And they're in the billions, so they're not small companies, and they've got low volatility as well, and they've got good valuations, and that's been a critical factor I've looked for, and they've got strong cash flows. And what surprised me the most was they weren't household names. Okay, and I thought they'd be household names when I went through all the various criteria, and those are going to be the names, amongst others, that I'm going to be giving people. We're actually going to go through 10,000 odd companies, and I'm going to show them how I narrowed this down and which ones I particularly like. And then I'm going to show them, because my son's going to be there and my wife's going to be there, I'm going to show them these are the ones I'm going to be buying into that ISA. So I'm going to hold off until we're at the event and then buy into the ISA and sit for my son and my wife. So people know, yeah, okay, he's you know, when he says this is his criteria, this is why he's doing it, he's actually going to show us which ones, and that he's actually going to be doing it. You know,
That's
it's not
it.
just, oh, I like a stock and just throw away comments. It's not going to be that.
Yeah, no, I totally get it. Fantastic. Well, listen, thank you for your time, Alpesh. I know time is money, and it's almost the weekend, so thank you so much for joining us, and I'm really looking forward to the event at the end of this month. And everybody, if you can join us, we'd love to have you. Do act quickly though, because as I say, we're half full already. We're only expecting a small group, so please don't delay. alpeshpatel.com/Spain, and you'll have everything there. Thank you for your time. Thank you, Alpesh, for joining us this lunchtime, and have a good weekend.
Thanks, Simon. Thanks so much. And thanks everyone else. And look forward to meeting you in Spain. I should say my mother-in-law is going to be there as well. Okay.
No comment.
See ya.